Hi, this is Stuart Cooper with your mortgage market update for September 14th, 2022. And I apologize for not getting this out sooner. I was trying to get this out yesterday, but I just had too many things to get done. So I want to get this out today because it was really important to talk about what happened yesterday. And unfortunately, rates are definitely going up. And I wanted to kind of explain it. And then I also wanted to give you my predictions. So in this video, what we're going to do real quickly is I'm going to talk about what happened, why rates are going up, where the rates are continuing to go. Yesterday, the consumer price index came out. It was expected to be 0.3. It was actually 0.6. What caused the financial markets just to tank? And the reason they're tanking is because the Federal Reserve is going to be meeting next week. And, a lot of Wall Street was expecting the Federal Reserve to kind of ease up on raising interest rates. And now there's the catalyst that they needed, that they are not going to be easing up on raising interest rates. They're probably going to increase them even more so to get inflation under control. And that's why the stock market sold off, because they know the economy is going to basically tank when they keep raising interest rates, and we're definitely seeing signs of that. So that was why there was a sell-off. And of course, mortgage-backed securities were off. Like I said, it went up about a quarter point. And then let's just jump into this. So right now, today we had what they call a gap opening. If you've watched my previous videos, I've talked about this, because the tendency for gap openings is for the market to close this gap. So we opened up in good territory, and we're like, okay, maybe we're going to get some of it back. And then look what happened later. Later, it just sold off, and we're back to where we were. So that gap did close, which is kind of be anticipated, because these gap openings or gap closes usually do close themselves. So let's just let me jump into this real quick. So let's talk about interest rates real quickly. So you can definitely see 30-year fixed rate, if you're conforming loans, are definitely on that. And this is national average, not to go into like credit scores and things like that, but we're about 6.3%. And that trend is going to continue to increase. And we're going to go into a little bit of detail on how we look at rates and locking. Okay. And then here's some important information. And then this just shows you the price index and 30-year fixed rate. So we're definitely getting this increase. And then we're going to go into a little bit more detail about it right now. But I thought this was a cool little chart because it shows you from like 2030. Actually, let me go to max. So you can see in the relative scale of things where interest rates are and where they can go. But we're going up. All right. So let's just jump into some of the more details on the charts. So let's just talk about what's going on in the foreseeable future. So I'm expecting rates to continue to rise. We're going to get little windows of opportunity where the rates will come down a little bit, but they're just opportunities. They're not general trends. And as long as inflation is high, rates are not coming down. So you gotta just understand that rates will not be coming down anytime soon. In the future, they will come down, but in the short run, don't even think about it. So what we look for is we look for windows of opportunity. The reason why I also think rates are going to go up is because all the leading indicators right now are showing us that the rates are going to be going up. There's so much volatility right here, but you see this purple line right here? This is the one that I look at. This shows me higher interest rates. This is showing me that everything is predicting higher interest rates. And then let's just go to my next graph. This is the mortgage-backed security, 4.5% coupon. You'll probably be switching that up to the 5% coupon soon. But like I was saying, here's the channel that I've been talking about. And I mean, it works both on mortgage-backed securities and the 10-year treasury, but we're definitely in this range. And you can see right here, this is a resistance level. That's why I drew this line. So we're right here. And ultimately what we're trying to do is when it comes to locking in interest rate, we want to try to lock when we're up in here. But the general trend is rates are going to further deteriorate. But when there's windows of opportunity, the rate's going to be better priced here. It might be in the form of a better interest rate or cheaper points. But we're trying to always lock when we're at here. But the downside is right now, and this is what sucks, is that the general trend is down. So as time continues to go on, we're most likely going to follow this trend downward, which means rising interest rates. But like I said, we look for windows of opportunity in a rising interest rate market, and they're just fleet opportunities. Sometimes they only last a few minutes, and that's why it's so key to work with somebody that analyzes this information so that they can pass those results on to you, because I really doubt that you're going to spend your time and days researching the market and trying to analyze something that I've been doing for over almost 30 years. I hope you found this information useful today. And of course, if you like the information, please subscribe to my channel. And if you have any questions or comments, go ahead and put a comment in there and I will try to get back to you as quickly as possible. Have a great week, guys. Thank you.